Business Watch, it is expected to be a rough week on Wall Street once again. Asian markets dropped to their lowest level since 2011 earlier today. Oil prices continuing to fall as well, dropping as much as 4% on some markets today. The barrel of crude oil fell below $28, and that's way, way down. Let's bring in financial planner. He's our guru here, Joe Bert. Joe, it's good to see you, man. Appreciate you being here.
Sure.
Okay, market's not doing so well. Some people are worried, of course, but for others, this is an opportunity. Why do you say that?
This is a great opportunity, particularly if you're contributing regularly in your 401k plan. Unfortunately, what most people do is this weekend they went online, looked at their account. Oh my gosh,
they're shocked.
I'm running to the money market account. I wait till things improve. It's the absolute worst thing you can do.
And like you've said in the past, we look for sales. You go out and buy things on sale. Right now, stocks are on sale. So you're buying a lot more stock at lower price.
Because the name of the game over your working lifetime is to get shares.
And dollar cost averaging, right? I think you have a chart here. Let's pull this up, guys, and have Joe explain it. Okay, so there's a lot to this chart. Explain this. What are we looking at here?
This is the secret sauce to making money in your 401k. What you're looking at, John, is a hypothetical illustration of two investments. Fund A, which is represented by the red line, goes straight up, and Fund B is the one that goes up and down like a yo-yo and gives you heartburn. Now, when you ask clients which kind of investment would you like, one that never loses money or one that goes up and down, most people say, I like the one that never loses money. Let me show you why in your 401k you actually want the one that goes up and down. We're going to start in January at $12 a share with both funds. We're going to put $100 in each one. All right, we're going to buy 8.3 shares. If you add up all the numbers over Fund A, the one that never loses money, the red line, you bought 82 shares. Okay, started at 12, climbed to 1750. Your 82 shares are worth $1,435. The one that went up and down in July dropped down to $2 a share. Now, what do you think most people do when it drops down to $2 a share?
Well, they get panic and they sell.
You can't buy 12 and sell it too. But if you hang in there, you bought 223 shares over that time frame. Started at 12, closed at 10. That account is worth far more than the one that never lost money.
Even though the stock is still lower at the end, you have $2,200 as opposed to $1,400.
Bingo, and that's the secret to making money. That is the absolute secret to making money in your 401k plan. Unfortunately, what most people do is when it drops down, they get out, they sell at the bottom, and they wait till it rises, the price goes up, and they buy back in. One
more headline we're seeing, I think Morningstar had it today, Wall Street Journal report was talking about it this morning. The headline is low gas prices are the raise you didn't get this year.
That's right.
It's funny how Wall Street sees these low gas prices as a reason for concern, yet consumers, there's a lot more money in our pocket all of a sudden. That's the raise you didn't get.
Right now, of course, Wall Street's struggling with it. The oil company's struggling with it. A lot of components of the Dow and the S&P are made up by oil companies. They're suffering right now, and that's why the market's going down. But it's great for consumers because, as you said, it puts money in our pocket. Money in our pocket means money in the stores. It's good for the economy in the long run.
I love that. May not be great for Wall Street, but it's great for y'all street.
You got it.
Joe Bert, how can people find you?
Just Google me, John, 2 words, Joe, B-E-R-T.
All right, Joe. Good to see you.
John.
All right, we'll talk to you soon.